Okay, let's cut through the noise and jump straight into something pretty fascinating happening over in South Korea. We've been digging into the sources you shared, really focusing on the Bank of Korea, the Bokeh, and what they're doing and thinking about stablecoins right now.
That's right. And for this deep dive, our goal really is to unpack this key article you sent over, pull out the crucial bits, and understand, the different pressures piling up that make this stablecoin issue so urgent for the bouquet at this moment.
Yeah, we're pulling insights straight from that recent piece, which lays out the central bank's view and some related things happening. And believe me, it's not just like abstract digital currency rules.
No, not at all.
It connects directly to new laws being proposed, the whole issue of rising household debt in Korea, and even what's going on with housing prices.
It really is a complex picture, isn't it, where this tech policy suddenly runs smack into hard economic realities. Okay, let's get into it.
So the first big thing your source highlights is this specific meeting coming up. It really puts a spotlight on the whole issue. We've got the Bank of Korea Governor Lee Chang-yong set to meet with the presidents of the major banks.
Right, that's scheduled for June 23rd, 2025. And it's happening at the Bankers Association building in Junggu, Seoul. Deputy Governor Park Jong-moo is going to be there too.
And the main topic. The source is pretty clear. It's the growing momentum behind one-based stablecoins. It's obviously not a niche thing anymore if it's top of the agenda for the governor.
Yeah, definitely moved center stage. And what's really insightful from your source is the Bank of Korea's official stance on this. They're quite cautious, especially about letting non-banking institutions issue these things.
Non-banking, so you mean companies other than the big established banks?
Exactly. Think fintech companies, maybe others. They seem wary of letting them issue stablecoins pegged to the Korean one.
And it's not just a general feeling of caution, is it? The source gets specific about their worries.
Oh, yeah, very specific. They're concerned about risks to their ability to control monetary policy. That's a big one.
Uh,
And also just risks to the stability of the whole financial system.
okay, stability, monetary policy. What else?
Well, a key fear they flag is that if these non-banks are issuing stablecoins and there's some kind of financial emergency or panic,
Uh-huh.
people might try to pull their money out really fast, rapid capital withdrawals. They see this as potentially undermining the box tools for managing the economy.
So it could make it harder for them to steer things.
Right. And just create instability in the financial markets generally. It's like trying to keep things steady when a big piece of the foundation could just vanish quickly.
Wow, okay. Those are pretty serious concerns for a central bank.
Okay.
But, and this is where your source says it gets really interesting, why this big meeting now? Focus specifically on this. Seems like something external is pushing the issue hard.
There absolutely is, and it's coming from the legislative side of things. Your source points straight to a new bill proposed by the Democratic Party of Korea. It was introduced by lawmaker Min Young-deok just recently on Juneteenth.
And this bill has a name.
It does. It's called the Basic Digital Asset Act.
Okay, Basic Digital Asset Act. What's in it that's causing such a stir?
Well, it has a few key proposals that really run counter to the box cautious approach. It would explicitly allow one-based stablecoins, for one. It also talks about setting up a high-level, presidential digital asset committee.
Okay.
But here's the kicker, the really crucial part. It proposes a dramatic cut in the capital requirement for companies wanting to issue stablecoins.
Dramatic how? What are we talking about?
Well, the current requirement is 5 billion won, which is, significant capital.
Right.
The bill suggests slashing that all the way down to just 500 million won.
Wait, from 5 billion to 500 million? That's a tenth.
Exactly, a tenth.
What does that actually mean, practically speaking, lowering the number like that?
It's a game changer. I mean, dropping the barrier from 5 billion to 500 million totally shifts who can realistically even think about issuing a stablecoin. Before, it was pretty much limited to the big, well-funded major banks, but at 500 million, suddenly smaller, maybe more innovative fintech companies could actually meet that threshold.
I see. So this proposed law basically paves the way for precisely those non-banking institutions that the Bank of Korea is already worried about.
You got it. It creates a potential pathway for exactly the kind of situation widespread non-bank stablecoin issuance that the box sees as a potential risk to, their core jobs, monetary policy, and financial stability.
So that's why the meeting is so urgent. The legislature is potentially opening a door. The BOC isn't sure it wants open, or at least not open so wide so fast.
Precisely. There's a clock ticking now because of this bill. The BOC needs to get its position clear, figure out how it would handle the risks if this law actually passes.
And Just to make things even more complicated, your source points out that this whole stablecoin debate isn't happening in a vacuum. There's a broader economic context that's already uh, challenging for the buck.
Yeah, absolutely. This meeting is happening just as concerns about household debt levels in South Korea are rising again. There's this thing called the Stressed Debt Service Ratio Regulation Phase 3 of it starts in July.
Okay, stressed debt service ratio. Can you break that down simply? What is it?
Sure. Think of it like a stress test for borrowers. It limits how much debt people can take on relative to their income, especially considering potential interest rate increases. Phase 3 basically tightens those rules or applies them more broadly.
So more borrowers might find their debt levels under closer watch.
That's the expectation, yeah. More people falling under this stricter scrutiny, so potentially more pressure on household finances.
Okay, so you've got debt concerns simmering. What else is going on economically that's relevant here?
Your source also mentions housing prices. Apparently, they've started ticking up again, but interestingly, mostly outside the usual super expensive, highly regulated parts of Seoul.
Oh, where specifically?
It names places like Songbuk-gu, Nowon-gu, and Jeomcheon-gu as areas seeing some price growth.
Right, so how do these things, the debt situation, the specific housing price rises, how do they complicate things for the Bank of Korea on top of this stablecoin pressure?
Well, if you put it together, high household debt, signs of the housing market heating up again, even if just in certain areas, it really ties the books' hands, doesn't it?
I so.
It limits their options, especially if they were thinking about monetary easing, cutting interest rates. Doing that could potentially make the debt problem worse or add fuel to those housing price increases. And
Ah,
this is extra tricky when the exchange rate is also pretty high. It's like they're walking a very fine line. They have less room to maneuver on the economy, and now this stablecoin issue lands on their plate, adding another thing they have to juggle very carefully.
yeah, it really paints a picture of the BOCAD dealing with multiple complex issues at once, not just stablecoins in isolation. Your source also quickly mentions the BOCAD has been active on related stuff recently too, right?
Yes. It notes that Governor Lee has been talking more with banking leaders, visiting 6 major banks recently, holding follow-up meetings.
So keeping communication lines open.
Definitely. And as part of that, they've been reviewing their own digital currency projects, things like Project Hanging and the Agora project.
Project Hank.
Yeah.
That's their CBDC exploration, isn't it? Central bank digital currency.
Exactly. That's their look into potentially issuing their own digital one. And Agora is broader, looking at the future infrastructure for digital finance. So it shows they're already deep in thought about this digital landscape.
Which makes this external push on stablecoins even more immediate for them.
For sure.
Okay, so let's try and tie this all together based on the material you share. This big meeting on June 23rd, it looks like a direct, pretty urgent reaction to the pressure coming from this proposed Basic Digital Asset Act.
Right, because that act could drastically lower the entry barriers for stablecoin issuers.
Opening the door wide for those non-bank fintechs the box seems most wary of. And this legislative push is forcing the box hand, making them confront what widespread stablecoins would mean, right at a time when they're already juggling existing worries about financial stability.
Worries amplified by that backdrop of rising household debt and those pockets of housing market activity we talked about.
So what's the bottom line here for the Bank of Korea? What does it all mean?
Well, I think it means they're being forced to make some really critical decisions. How do you integrate this digital currency innovation, which is clearly happening, into the existing financial system?
While also managing these significant macroeconomic challenges.
Exactly. It's that classic tension, isn't it? Fostering new tech versus maintaining stability and control, which are, their fundamental jobs.
Yeah. So this deep dive, pulling straight from that source material you gave us, really gives a focused look at the specific pressures and the sheer complexity the Bank of Korea is dealing with right now on this stablecoin front.
It really does highlight that core tension. The push for innovation may be helped along by lowering barriers for new players like fintechs, clashing with the central bank's absolute need to safeguard financial stability and steer monetary policy. And all of this is playing out in a pretty tricky economic environment already.
So thinking about all that, especially the BWOC's stated fears, about rapid capital outflows, losing monetary control, and then you have this proposed law that makes it much easier for new players to jump into the stablecoin game. What do you think is the single most critical question facing the Bank of Korea and the regulators right now? That's definitely something to chew on, based just on what we've unpacked here.